Seeds of Wisdom RV and Economic Updates Thursday afternoon, the 5th of June 25. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Good afternoon. Dinar recaps. RWA token market grows 260% in 2025 as firms embrace regulating crypto. RWAs are benefiting from increasing U.S. crypto regulatory clarity, which has pushed the tokenization sector past $23 billion. The tokenization of real-world assets, RWAs, surged in the first half of 2025 as increased regulatory clarity fueled broader adoption of blockchain-based financial products. Real-world asset tokenization refers to financial and other tangible assets minted on the immutable blockchain ledger, increasing investor accessibility and trading opportunities for these assets. The RWA market surged more than 260% during the first half of 2025, surpassing $23 billion in total valuation. It stood at just $8.6 billion at the beginning of the year, according to a Binance research report shared with Cointelegraph. Tokenized private credit led the RWA market boom, accounting for about 58% of the market share, followed by tokenized U.S. Treasury debt at 34%. As regulatory frameworks become clearer, the sector is poised for continued growth and increased participation from major industry players, the report said. Although RWAs currently lack a dedicated regulatory framework and are considered securities by the U.S. Securities and Exchange Commission, SEC, the sector is still benefiting from broader regulatory developments. In crypto, on May 29, the SEC issued new guidance on cryptocurrency staking, a move widely interpreted as a sign of more sensible regulation. Alison Mangiero, head of staking policy at the Crypto Council for Innovation, called the guidance a significant win for the industry. The market is also awaiting a full Senate vote on the Guiding and Establishing National Innovation for U.S. Stablecoins, Genius, Act, which seeks to establish clear rules for stablecoin collateralization. Other analysts cited Bitcoin's temporary price consolidations as a major driver for RWA growth, positioning the sector as a safer investment option. With more predictable yields, corporate FOMO fuels Bitcoin balance sheets. A renewed corporate FOMO, fear of missing out, is inspiring more companies to adopt Bitcoin on their balance sheets. As of now, at least 124 public companies hold Bitcoin as part of their corporate treasury, according to data from BitcoinTreasuries.net. While the summer may typically slow crypto activity, Binance research noted that broader macro conditions and regulation will dictate the speed of future corporate adoption. They explained, corporate BTC adoption is driven by long-term balance sheet strategy, treasury diversification, and capital raising activity. Long-term perspectives, not short-term liquidity or seasonal trends, are expected to continue shaping how and when corporations move to integrate Bitcoin into their financial. BRICS versus G7. Who is richer in 2025? BRICS is competing with G7 to take on the monetary world and influence trade policies to its benefit. The alliance is a towering figure in the global markets, threatening the global financial order. The ultimate goal is to tilt the power from the West to the East and usher the world into a new financial order. Now that BRICS is competing with G7 on the international stage, let's see which alliance is richer in 2025. Richest alliance in 2025, G7 or BRICS? 1. Alliance overview. BRICS members, 10 countries: Brazil, Russia, India, China, South Africa, Egypt, United Arab Emirates, Ethiopia, Indonesia, and Iran. Population 3.5 to 4 billion, 40–45% of world strengths. Natural resources, energy dominance, rising middle class, growth potential. G7 members, 7 countries: United States, Canada, France, Germany, Italy, Japan, and the United Kingdom. Population 800 million, 10% of world strengths. Wealth, controls global financial institutions, wider financial influence, technological supremacy. 2. Economic comparison. In 2025 BRICS, nominal GDP, $30 minus 32 trillion GDP in purchasing power parity, PPP, $60 minus 65 trillion global GDP share. 30%, nominal, 35%, PPP, G7. Nominal GDP. $45 minus 50 trillion GDP, PPP, $45 minus 47 trillion global GDP. Share. 45%, nominal, 30%, PPP, 3. Final verdict. So who is richer? The final verdict goes to G7 and not the BRICS alliance, as the Western Bloc remains richer in traditional economic terms. It is an economic superbloc, with real-world financial leverage that can make or break global markets. The G7 controls global banking and financial institutions worth trillions of dollars, with higher per capita wealth and global geopolitical dominance. On the other hand, BRICS is rising in power but still lacks per capita wealth and is struggling to gain cohesive global influence. The alliance is also divided on internal policies, while the G7 remains a closely knit, coordinated economic force. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: Dinar Recaps.